Hey traders, in this video, I am going to reveal the exact secret to finding the best time frame for drawing support and resistance levels. I'm sure you opened a chart, drawn your support and resistance lines on a 1-minute or 5-minute chart, and watched in frustration as the price completely ignores your levels and hits your stop loss. This happens because you were focusing on market noise, and in this video, I will show you how to use multi-time frame analysis to find the strongest key levels that actually hold. First, we need to understand a very important rule about time frames and key levels. Support and resistance levels are not all equal, and their strength depends entirely on the time frame they are drawn on. If you draw a support level on a 1-minute chart, it is extremely weak, and large institutions will easily push the price right through it to grab liquidity. However, if you draw a support level on a 4-hour chart or a daily chart, it represents a massive amount of historical buying or selling pressure, making it a much stronger level where price has the highest chance of reacting. So, what is the best time frame to use? The truth is, there is no single best time frame, but rather a combination of two time frames that professional traders use. You need a higher time frame to draw your major support and resistance levels, and a lower time frame to confirm your entries. Here is a simple cheat sheet you can use when trading on multiple time frames. If your higher time frame is the weekly chart, you should use the 4-hour chart as your lower time frame. If your higher time frame is the daily chart, use the 1-hour chart as your lower time frame. If you were looking at the 4-hour chart for the higher time frame, use the 15-minute chart for your lower time frame. And if your higher time frame is the 1-hour chart, use the 5-minute chart as your lower time frame. Let us walk through exactly how to trade this strategy step by step. The first step is to open your higher time frame chart, let's say the 4-hour chart, and identify your major support and resistance zones. These are key areas where significant amounts of capital have entered the market in the past, causing the price to bounce. You want to find obvious areas where the price went down, hit a level, and aggressively reversed back up to mark a strong support. Draw a rectangle around this area because remember that support and resistance should always be treated as zones and not just thin, solid lines. Once you have your strong, higher time frame level marked, you simply wait for the price to retrace back down to that support zone. The biggest mistake traders make is blindly taking a buy position the exact second the price touches the line. Strong levels are not magic, and prices can always break right through them if the momentum is strong enough. That is why you must never enter without confirmation. Now, the final step, which is your lower time frame entry confirmation. When the price finally touches your 4-hour support level, you want to immediately zoom in to your lower time frame, which, based on our cheat sheet, would be the 15-minute chart. On this 15-minute chart, you are looking for signs of momentum loss from the sellers and strong buying pressure stepping in to confirm the bounce. One of the absolute best ways to confirm this is by looking for a bullish engulfing candlestick pattern right at your support zone. A bullish engulfing pattern is a 2-candle sequence where a smaller red candle is followed by a larger green candle that fully covers the body of the first candle. This tells you that the sellers have exhausted their momentum at the higher time frame support, and buyers have strongly taken control to push the price higher. You could also use a bullish pin bar, which is a candle with a small body and a long tail sticking out from the bottom, indicating that sellers tried to break the support, but buyers aggressively rejected it. Once you spot this confirmation pattern on the lower time frame, you enter a buy position at the close of the candle. For your risk management, you must place your stop loss slightly below the support zone so that your losses are kept small if the trade fails. Then, set your take profit target at a minimum of 2 times the size of your stop loss. By using a high time frame to find the safest levels and a low time frame to get the most precise entry, you keep your risk incredibly low while maximizing your profit potential. If you want more simple and easy to understand trading strategies like this, or if you want to see how I analyze the markets in real time, make sure to join my free Telegram community. Inside, I share my daily market outlooks and trade setups with my subscribers every single day, completely for free. You can find the link to join in the description below. Also, if you found this video helpful and enjoyable, kindly do me a small favor by hitting the like and subscribe button. It literally only takes 2 clicks, but it means so much to me and helps the channel out a ton. Thank you guys so much for watching, and I will see you in the next video.